Well, welcome everyone. Poor Jason is having issues today like I had yesterday with the internet, which is not fun. So we'll go ahead and get started here. Today we're happy to have Ellen Kirton with us from Pima Community College. And Ellen, we'll just let you take it away.
All right, so I'm the director for the Small Business Development Center at Pima Community College. And one of the reasons to stay real up to date with SBA is they're one of our funders. And so between Pima College and the SBA, we're able to provide no-cost one-on-one counseling to small business owners. And it's never been more relevant than this last month. So, and this is really time for Q&A as well. So as you go along, or if you want to speak. And when you really think about it, having worked with SBA most of my career, I think I mentioned earlier, I'm a 35-year banker, was a senior vice president at Chase, ran business banking all over the state. And, you know, working with SBA is generally, you know, a long process. And it's because the means by which they approve it, the collateral they take, it's a time-taking process. So for what they put together in a couple of weeks is nothing short of miraculous in my mind. Take all the bugs and everything that goes with it, and we really have to be grateful because, you know, it's already saved a lot of companies. So for all the problems that you hear out there, in total, I believe they've done an amazing job. And with that in mind, the first loans out were the disaster relief loans, because SBA knows that best. However, they're used to doing a loan, say, you're in Louisiana and there's a flood, and how many people are going to help? Versus this scenario where it's all the businesses in all the 50 states, and just think of that pure volume. So when it was first introduced, there were some that got in, but pretty much crashed the system pretty early on. And so what they had to do was build more bandwidth, and they had to hire people. They had no idea of the volume to expect. Hi, Danielle. And so with that, I just want us to be understanding of that. And like I say, I'm pretty impressed with what they were able to put together in the time that they did. Now with those first loans, it's kind of interesting because what they said was, we can, in 3 days, we will make a decision, and in 3 weeks, we will fund you. That was how this all started. And Joel, who's on the phone, I'm sure I don't know if you were doing these then, but that was pretty remarkable if it could have happened. But it only took a couple of days really to realize that could not be the case. And so, the reason is, when you think about it, if you were to go to a bank and apply for an SBA loan, you're looking at a couple of months. And that's because the first part is underwriting. Do you qualify for the loan? The second part is taking collateral, and that often is the part that takes a lot of time. Now, why do banks use SBA loans? That's because if they did not, they would not make the loan. They feel there's too much risk. It's all about risk with lending, even with these loans. And so if a bank has someone come in and they can't qualify for what's called a conventional loan, so they're buying a building and they can't put 20% down. They can only put down maybe 15%. Or maybe their debt to income ratio, their ability to repay the loan is not high enough. They don't have sufficient collateral. So what SBA does in those scenarios is guarantee the loan, generally in the 75 to 85% range. So if the bank makes the loan to you and down the road, and the bank has stayed on top of things, the financial statements and all of those, and then you default, the SBA will come in and provide that insurance coverage to cover that loan. So you can see why this would make lenders want to make loans with SBA guarantees. And I can tell you that we were in a recession, the longest one in history as I understand it, and now we got out of the recession. During that time, I can tell you the majority of loans made were SBA, just because risk was so high. We are now going into another recession. When we take a look at the unemployment rates, which is a major indicator, those are really high. And so with that, and going into a recession, the whole environment is going to change again and tighten up. These particular loans, because they came, the ones that are the disaster recovery came from the SBA and their funds. The ones for the PPP, I'm just gonna, the payroll protection program, I'm just gonna say that whole thing once. So the PPP loans, unlike that, is a one-time situation specifically to keep employees employed. And so when we take a look at that, even the unemployment, you know that everyone who qualifies for unemployment because they've been laid off gets an extra $600 in their paycheck. And the issue with that is that if you look at a lot of the service companies, when they call them back because they got this loan, this PPP loan, they don't want to come back because they're actually making more money on unemployment than they would if they came back at their full pay. So it's really caused a dilemma along those lines. And so I'll toss this in as I go through this, but that's where the SBDC comes in. We do the no-cost one-on-one counseling, and we can have every conversation, and it's confidential. So we're having some interesting conversations right now.
And real fast, are you guys still taking appointments? I mean, I know you said you have 200 customers between three of you. Are you guys still taking new appointments?
We are. We've gotten quite a few funded. I know for myself, I've been working with about 45 or 50. In addition to counseling, you know, I'm the director and I'm doing all these. My other two folks that are doing counseling counsel full time. So probably the dollar amounts more than $5 million. And this is everything from the smallest one's probably like $1,000, but all the way up to 600,000 and everything in between. So yes, that's why we're here. And I think the big thing, and y'all, Adam can talk about it after, but we're a long-term counselor. We're not just, if people are going to need us as much, if not more, when this is over, because you can navigate your way through this. Working with us, we can certainly help grease the skids and get it sooner. But following this, there's going to be reason to work with the SBDC. And so we all have a great deal of experience. Karen Burns also was a banker for 25 years. She has a good legal mind, and she's, although we don't give legal advice, but she knows when to refer. And Rick Loveland has owned a number of businesses. He's turned businesses around up in the $20, $30 million range. So we all can do everything from the first $100 loan to multi-million-dollar loans. I think when I first took on the SBDC, I got a group of professionals together and I said, so what's the SBDC? They said, oh, you help people start up loans. Well, I have to tell you, if that was all my job was, it wouldn't be enough. You know, any of the three of us. We love doing that. Last year, we helped 38 companies get started. But what's different with us is we keep working with them to grow profitably, grow strong. And so I love that. So just does that answer your question, Adam?
Yeah, no, that's great. I just, I know that there's some infrastructure issues all over the place with the volume. So I just want to make sure, because we still, Ellen, you and I go back a couple years now and trading businesses and all that stuff. So we're still getting a lot of businesses that are calling and asking about this. So any resource we can provide is great. So that's why I was just curious if you're still pretty active.
Yeah. So on the PPP loans, the big thing with those is the forgiveness aspect of them. And I tell you, to precede that a little bit, anyone who has an existing SBA loan actually had 6 months paid for by the SBA. So 6 months, no payments. I just, again, when this is all over, we need to write Washington and say thank you for a lot of this. That's a real relief. That's usually your biggest expense is your building, say it's a building loan. And people were calling me and saying, is this okay? I said, yes, it's okay. It's really meant to be there to help you. So that was kind of where that started. So first we had the disaster relief loans, and basically those loans are 3.75%, and they're 30-year loans, so the loan payments should be manageable. And then there's, because they were taking a long time, which is why I wanted to explain to you why they were taking a long time, they came up with some, I call them bridge loans. And these are up to $10,000. And this is just to keep the wheels on the truck. I had one client call me today and say, I just need to get through these next 20, 30 days. And I need that $10,000. So the one requirement that came up actually later was that it's based on $1,000 per employee. So if you only have 3 employees and you're looking for $10,000, you're going to get 3. And I don't know how clear that was in some of the information that went out. And that is closed right now. The money has been allocated for it, but they've determined first, and so I think a lot of this again is systems, is that they are not going to reopen it until they fund what's in the queue. So in its way, that's a good thing. But I know people are, now that it's a month into this and a month without getting money in or being able to serve in an open restaurant and all of those things, it's really starting to feel the pinch. So on the forgiveness part, which is really important, since it's all about payroll protection, so there's an 8-week process, and the 8 weeks start the day you get your money. And so that's why your average payroll times 2.5 covered 8 weeks. And so you'll be asked to prove at the end of those 8 weeks that you still have that personnel. 75% of the amount of the loan that you got has to be payroll. 25% can be mortgage and utilities. So that might give a bit of a buffer. But because of everything that happened with the first round of funding, and I know this is the banker in me, but, and that's why tomorrow I'm talking about banking relationships, because the people who have been most successful getting loans have a banker. And if you haven't done it before, going from here, you want to know your banker. And good bankers, I'll give an example. National Bank has been really great. And they, they notified their clients and said, can I help you? And they walked them all the way through it and got a lot done. Other banks, you couldn't even talk to a person. So there was the whole spectrum. And if you have a banking relationship and a person, you're in a better position. So Joel, who's on the phone with us, he's with a bank that doesn't have a branch. You primarily do SBA loans, but this is really your cup of tea right now, right?
No, that's absolutely right. Yep.
Yeah. So, Joel I've referred some folks to Joel, and he's getting, people funded. So you need to know somebody. You call the 800 number, all of those things. And I can tell you that one of the big banks, I had tried to go through the application process myself, just because I do have a company, and I just wanted to see the process. And it was one of the big 3, and it was weeks and weeks. Everything was in, and nothing got done. Just the same email back, asking for something, but not saying what they were asking for. And no information about it. And that's what I hear from so many of my clients. So then I went to Joel because I wanted to see Joel's process, and Joel's doing it. So he's helping a lot of clients. So knowing your banker, I just can't stress that enough, how important that is.
Hey, real fast, I just have a question for Joel. Joel, are you, for those loans, do you need to have an existing relationship? I'm sorry, Ellen, I'm not sure if you just said that, but, or is it more or less, just anybody who's in need?
No, that's a really good question, Adam. We are helping all, whether they're existing customers or non-customers. So, and even over the weekend, knowing that the funding was going to open up yesterday morning, we were still taking applications and processing applications through the weekend. And I believe we'll still take applications because we're just unsure of how quickly, the fund maximization will happen. I know last time it happened really fast. So we're thinking this is the same too, but we want to help as many people as possible. And to kind of tag on to what Ellen was saying, we've heard so many customers have that issue where they submitted an application, they don't hear anything back. Now, some are getting, really lucky and getting the help that they need, and that's most important. So regardless of whether I'm doing it, another lender's doing it, their bank's doing it, as long as they get the the assistance, that's all that matters. But to not have that correspondence back, that customer service back to them, I'm sure caused a lot of frustration and stress of that uncertainty. So that's what it's about, is just about helping at this point.
Great, thank you.
And when this was all introduced, because the loan is funded, what they had recommended to everyone was to go to your bank where you have a checking account. If your bank was not an approved SBA lender, they suggested you go to one. So people just did that without realizing that maybe they weren't going to have the greatest experience. They were just following the rules. So some banks, like WaFed is a fairly new bank, and they set up early on to do the smaller loans when people opened up accounts. So, people kind of fell into that scenario as well. So, but now there are other ways to get the funds to the bank, and so it doesn't have to be your bank. And so that was just a misnomer at the beginning. But again, everything you find out as you go. We didn't know until we were moving along the way. So wanted to talk about a couple of other things. So the city of Tucson yesterday announced that they have $1 million loan fund for companies within their area. And the Business Development Finance Corporation, the BDFC, is handling those. So they didn't really say the parameters as far as the loan amounts were, but it's specifically to help businesses that either didn't get enough funds or didn't get any funds and need some help. I just sent my first referral today. So there are other alternatives, and Adam, Danny's with I know it's a CDFI, but
Midwest Regional Bank.
No, that's Joel, but Danny, that's
Danny Nee from
Community Finance Corporation.
Yeah, Community Investment Corporation. Yes, yes.
There's a few of those, so I get them, but they're very helpful. There's some things called Kiva loans. Those are very small, but some people, that's all they need in their early stage, and they have those available as well. So there are some options. So let me give you an example of some advice that we give. So I have one client who has a salon, and the city obviously said you got to close it. So he closed it, laid everyone off, and then the PPP loan came along, and he was able to get that. And so he said, well, I want to bring my people back, but what are they going to do? And literally some companies are just going to let their employees work from home. But I said, well, why don't you bring them in? And they perform services. And I said, why don't you have them make videos? Because I'm at home and I'm very particular, if anyone knows me. So my hair and my nails and all those things, and do it yourself right now. So I said, why don't you have them do videos and show them how to do their own, what product to use, how do you keep it going during this time? he was all jazzed. His folks were really jazzed. And I don't know if a lot of companies are thinking about that, is where do we go from here? So if you've got some immediate relief, you have your employees, have them help you get to the next stage. And again, that'll be the next webinar that I do. And that's going to be on resiliency. So you either take this and feel like a victim, or you take this and it's a point in time you had no control over. You do what you do just to keep the wheels on the bus, but then you're planning forward. And what better time than now to do that? So it's kind of taking people up, taking, you know, by their shoulders and saying, okay, so what can we do with what we've got? So I just think that that's really important. I want to make sure that there's, there was a couple things, hold on. Okay, one other thing is if you get one of the PPP loans, they're not sending you documents. You're going to get a docu form to sign. You need to print them out then, because that's the only time they're in your hands. We always get copies of loan documents because I like to read them. I don't like surprises anywhere. In other words, some people will put in a condition like you have to keep this ratio. And if the client doesn't know that, they don't know to submit those records. They don't know the bank's looking at those. So I like to look at, especially at the note, these are unsecured, so there's not the security agreements and all the rest of that. But you need to know what you just signed up for and what your responsibilities are, and they're all in there. So generally with our clients, we get the copy of the note and we review it for them or with them. So the whole process with us is working with our client. We don't do it for them. One thing people don't learn when you do it for them, the level of appreciation and understanding is different. So we do walk hand in hand along the way. And again, we, you know, in the position that they're in, you really want them kind of to equalize, and we get to do that just because they need to talk to somebody who cares. They can talk to some of their peers, they can talk to family, but it's just not the same of, okay, professionally, how can you get me to the next step? How can you get me here and there and there? So we really take a lot of pride in that. So tomorrow, as I mentioned, when I'm on the ACA, talking about these bank relationships, few little horror stories where people tried to go through their bank. I have one client that just got approved, and he applied the second day this was open. And all along it was something's missing, something. And this is a mid-sized bank. It's not one of the big banks. This is someone he talked to his banker about. Am I missing something? Well, the thing is, some of the mid-sized banks are really owned by an out-of-state bank. And so the underwriting is centralized. That means that the bankers themselves have no idea what it looked like or what the, you know, if there's a stumbling block or what those are. They're just going through this huge volume of applications. I can just tell you from experience, I had a $2.5 million lending authority, and I saw every credit that went out of my office. And so I would go visit, our underwriters were in Dallas. So I would go there 4 times a year, and I would fly them up here because they just behind a desk, they never meet a person, they're getting a package, and just picture it like this. So I get 3 packages in. The first one is all disorganized. I'm not sure what's there or not there. Second one, neat as a pin, but so many things are missing, I can't even get started. The third one is organized and everything's there. Now, which one am I going to pick up first? Which one am I going to feel better about how they run their business? And I'm going to be more open because underwriters will never meet the client. So there's no connection that's made like there is with the banker, you know, in a customer relationship. They're just, it's the hard facts. That's what it is. So when they're going through the volume that they are right now, and it's basically pass or fail, right? It's the same thing. So we just make sure everyone really does a complete package. There's some good spreadsheets out there for calculating. ACA has a great one. So just keeping it organized and making it easy for the person on the other end. Having been that person on the other end, I can just tell you that, you know, my clients were well trained and we got things done and we got them done quickly. So that's really important. So that's pretty much on the loan part. I think when we talk about some of the resiliency and things, we're going to be talking about marketing efforts. And hopefully for those of you with a business, if you have a website, that you're going on your website and keeping contact with people. It might be a hint. It might be, you know, here's something to do for, you know, exercise. I have clients that have gyms, and they're doing the same thing with the videos, so that folks continue to pay, you know, their monthly membership, and they're getting some value for it because you're at home. I don't know how you all are. When I first started the first week, I walked every day in my neighborhood, and I haven't since because I don't have time. I miss that. And so having someone the other day just sent me a video to do a 15-minute workout. I can probably steal away 15 minutes and keep going. But do you think after this is over, they're going to want to go to back to that gym? They're going to be, yes. Did I not say it right, Valerie? They will, because somebody helped them during this time, right? It's kind of like, you know, somebody showed me how to keep my nails up. Am I going to feel good about that, you know, that company at the end of the day? I am, because they're helping me get through this time, and I'm going to want to stay in touch with them. And so many folks get overwhelmed with the quote unquote disaster part of this, instead of saying, all right, what can I do? What should I be doing with this time? How do I engage my employees? How do I continue to make them feel important? I'm on a nonprofit board, and one of the things she asked for, she said, for the board members, she said, you know, if you all could get some gift cards, we can give our folks, because they have to work around the clock. It's a children's advocacy center that works with abused children. And so those gift cards go a long ways for someone, because they can go online and order something, right? It's not like maybe going shopping. But boy, that just makes that staff feel so special, and they're doing what they do out of their heart. But boy, to have that extra boost. And the other day, I don't know how many of you've seen this. I have my auto insurance with American Family with Beth Danheim, and I get a letter saying we're sending you $50, just like that. How cool is that? How is that customer retention? I've seen a couple of others now doing some of that. TEP was talking about it. So there's things you can do. You got the funds, you got the folks there. What can you do to move this thing along and not just start the day we're allowed, you know, to be anywhere but home? So that's kind of my comments, and then I just want to open it for questions. Okay, Shirley, are you asking? You have to unmute.
No one has any questions? Jason, I see you're back. Welcome back. Do you want to take over?
Sorry about that, Ellen. I had to go to my phone. I'm having some serious issues. I'm not sure what the problem is, but I don't have any questions. But when you're done, I'll do some announcements for this rest of this week. So.
Okay, Valerie, any questions?
No, I'm good. Thank you.
Hey, Ellen, I've got a question. You know, it's, as I mentioned, we're getting contacted by members on a daily basis, and obviously we're already in our second round of funding for small businesses. You know, we've already heard reports that the majority of the funds that are made available this time have already been allocated. What do you see in the future? I mean, how much more of these, you know, SBA loans and all that can we as a country sustain before it starts to get a little more concerning?
Yeah, there is talk about a third. Right now it's talk. We already have a deficit. So what we're doing is adding to the deficit, to be honest. And when you talk about, and so at some point, to continue this, they're gonna have to take from Peter to pay Paul. You know, at some point that's gonna have to happen. But if it, you know, they're looking at if it saves the country, as I say, we are going to go into, we are already technically, but have a recession. We're not looking at an 8 or 10-year recession. And a lot of that will have to do with how we react and what we do. And that as consumers, we go back and buy, you know, that we frequent our places, that, you know, it's hopefully people between all things, the $1,200 check from IRS, that was pretty cool. I mean, there's been a lot of things to try and help people just sustain. So if you're in that place and then you get back to working, having a paycheck, spending some money, that will be important. You know, going to restaurants first time, you know, they're doing takeout, but that's not near enough to cover. I thought it was pretty interesting when they were offering, you could take wine home with you.
Yeah, you can even buy groceries now, I think.
Yeah. So did I answer your question?
Yeah, that was good. And then, you know, I just, you know, what is your outlook? I mean, what are some of the, you know, what reassurances do you have with someone with as much experience as you do for some of these small businesses who are, you know, coming in and just really in dire straits? You know, it's good information for us too, because, you know, we get a lot of those calls too. And if we're all trying to find ways to kind of be positive and keep everybody in the right frame of mind. But what do you know, how do those conversations look for you, and what advice are you giving people right now?
All right, so one of my larger clients we do a lot with construction and with government contracting, and so they've just worked a relationship because of the accounts receivable. So they were going to have to take their payments in, you know, in pieces, and fortunately she got the PPP loan. But just having those conversations, you know, with your vendors, don't just get to a place where I can't pay. You don't say anything. You know, you say, well, can I arrange to pay a little? The worst story I had when this first started was it was the landlord one. And I know the governor must have heard some of it because he came out with an edict. But I have this one client, and truly it was, I think, the first week, because her rent was due on April 1st. And it was about a week or 10 days before. And her landlord wrote her a letter and said, I expect my rent on the 1st or you're out of here. First was shocked. and then I told her, I said, no, this is what you're going to do. You're going to get your lease. Do you have an attorney? Have the attorney look at it, because it's going to be rare that anyone's going to sign a lease that says you're out of here if you don't pay on time. There's always however many months, you know, at the end. So what we recommend to business owners is go to your landlord. Don't wait. It's going to be late. Don't do that. Go to them right away. They're in the same boat, and they can come for these loans as well. So just tell them, can I put 2 months on the back of the loan? Or I'm applying for the disaster loan or the PPP loan, and I'll be able to pay you when I get that. But go and talk first. This waiting until they come to you and now, you know, they've got a wedge between you is not good. So it's the same thing with your vendors. Having that conversation is really important. Most people are pretty good. You know, you're always going to have the ones that are not. So when we're talking to folks, that's the kind of questions we're asking. You know, do you have any loans that can be deferred? I know one of the banks was deferring credit card payments, 3 months or 6 months. And so that's a big help. So when you take a look at what's stressing me, point them out, say, who do I talk to about each one? And then people do want to work with you as much as they can. Okay.
Yeah, that's great. Thank you.
Danielle, did you have anything?
No, I do not. It's been very enlightening though. Thank you.
Oh, good. Well, that was kind of the thing. Instead of it being a webinar that's ABCD, we wanted to have more conversational and be able to answer questions a lot, which again, I've heard through our clients, but I'm sure the ones that, those of you that are here have had a couple of these things be in your situation. Like I say, the banker one tomorrow, I don't know if you can get that out, Jason. The ACA webinar in the morning at 9 a.m. If you remind me, I'll send you the link.
Yeah, I'll email you.
We're gonna be talking, it's all about banking relationships. And then, boy, was this a big aha. Because when you know you're the kind of banker that you are, it's really hard to know that there's some that are not. And so if you're a banker for the right reason, and you know, I loved banking, and I loved SBDC because we get to give back every single day. There's nothing in it for us except the pure satisfaction of being able to help someone. And that's who we keep at the SBDC. And we were just on the phone together this morning, just sharing stories and how can I help this situation? And so we're, you know, really close team, and there's a lot of resources in Tucson that are just amazing. And I think I'm just grateful to be living here. You know, this time.
Great. Does anybody else have any questions? Oh, all right. Well, thank you, Ellen, for your time. Really appreciate it. And again, Ellen Kirton from the Small Business Development Center at the Pima Community College. We always appreciate your help.
Okay. Thank you.
And,
Thanks, Ellen. It's great to see you.
Same here.
And I just want to let people know tomorrow we're going to have Jack Clements from the Clements Agency. He's going to talk about conventional wisdom from the insurance industry and alternate arguments as to whether you file a claim or not. So if you have to register for that, please do so. And again, thank you, Ellen. I'll get that information from you. I'll email you about the ACA webinar right now.
Okay, great. And then we'll set up the time for the CNC one.
Okay. All right.
Bye. Bye, everyone.
Thank you so much.
Bye. Thank you.
Thank you.
Take care.
Bye, guys. Bye, Shirley.